Let's talk about these markets in 3 minutes then, Mark, and pull together some of the threads we've seen, because it's been a really interesting 24 hours, actually. We had some fairly hawkish comments, as we mentioned in our headlines, from some central bank governors. But then, I'm thinking of Waller here and his comments about the dot plot. But then we've got Bostic talking about what he sees as the possibility of a pause in the summer, and it seems the market lent only a dovish interpretation to what he had to say. How do you pull all of these threads together then, Mark?
Well, as far as I know, Waller's a voter and Bostic isn't, so that's one thing to think about. The second thing is, Waller said if, the next couple of, the data doesn't soften before the March FOMC meeting, then he's going to have to change his dot plot. He is definitely going to have to change his dot plot. No one in the world is expecting inflation to suddenly soften on the next data print, and there's no sign of jobs weakness either. I mean, sure, we're not going to have a blowout NFP again, I hope, for the sake of the kind of rates market out there, but it's unlikely to suddenly be negative jobs. So it is very clear the dots are going to go much higher, and Waller is going to be moving his own dots a chunk higher as well. We know that in March.
Okay.
So I think that's the really important takeaway. As for Bostic, sure, we might get a pause in the summer, but the summer is still 3 or 4 months away by my calendar.
OK, yes, so that's what we're talking about in terms of the time horizons here. So tell us how you see what happened yesterday happening. You talked about how the focus was on higher rates and about whether we get to 5% on the 2-year, for example, and yet stocks rise on some comments that could have been seen as hawkish, but were taken as dovish from one central bank governor who's not voting. Why are markets in that kind of mood, Mark?
Yeah, I have to say, I thought the resilience yesterday was very impressive. There is something that I find that is interesting. There's a couple of takeaways. One is the curve starting to re-steepen. We're actually seeing the long end go up, and that's actually quite a good thing. We're seeing the curve normalize a little bit, and that's kind of a little bit healthier for markets. Is that the reason that stocks rose? No, I'm not really sure it is, but it's kind of a background healthier dynamic. We have talked about in recent weeks that the idea that if yields rise because of a hawkish Fed official, that's less good for equities. You're right to point out we didn't see that yesterday. I think, though, that there's a certain dynamic that with 2-year yields having risen 85 basis points in just over a month, there's a general view that, hey, they can't go much further from here. And the fact that those hawkish comments from Waller didn't see a big rise in the 2-year is kind of going, OK, the rates move for now is short-term exhausted. Sure, they might be going much higher in a month or two, but they're not going to go much higher in the short term. And that means that equities might get a little bit of a bid here. The final thing to observe is it's a little bit of a technical situation. We bounced off some key technical levels, and we've had the new month calendar rollover after some rebalancing at the end of last month. So that's going to help a little bit at the margin too.
OK, we've just had a few days to get used to the idea that it is March. What a relief it is March. Let me ask you then about what's going on with crypto. Crypto sinking seems to be the headline here. And we can continue to see that overnight, down 4.5%, I see, on Bitcoin. I read that due to Silvergate, this latest crypto fallout story, the banking system is, quote, mostly sheltered from it, which is sort of comforting.
Yeah, absolutely, it's sheltered, but I think there's been some high-profile funds that appear to have been maybe exposed to this. There's just a little bit of nervousness across the sector about what is the next kind of domino to fall. It shows that we're not past the crypto turmoil of 2022. It's going into 2023.
OK, we'll focus in on that, no doubt, for sure, as we go through this year. Remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV Go is the function to use on your Bloomberg terminal.